All right. Well, I know I sometimes seem like a nut job, right? Because I always say I enjoy certain topics. And this one I will say as well, I really do enjoy our capital structure and management lesson here. What is it? Why it is important? And what does raising capital do for a firm? Now, if you are thinking back to FAR, if you've taken FAR, just to put it in context for you, right? We always like to do that, connect the dots, all the exams, it's all connected. So this is essentially right. We have our cash flow statement, our operating, investing, and financing activities. Generally, what we do, regardless of FAR, regardless of any of that, but that is relevant there as well, right? We are going to finance. This is our business process. We finance in order to raise capital, which is what we're talking about here. In order to buy assets, those are investing activities, right? We're going to buy machines, we're going to buy factories, we're going to buy equipment, we're going to buy anything we need to conduct our operations. All right, so let's think about this. We are Nike. We're just getting started as a company. And what do we do? Well, we'll talk about this much more in depth throughout the whole lesson. But we finance. We finance by raising cash through debt, through equity, preferred stock, all of that. We'll definitely get into that. Then, us as Nike, we take this cash, we purchase machines, factories, anything we need to produce shoes, which are then used for our operations, our day to day cash flowing activities. This is, I don't know if there's an official name for it. I'm sure there is, but you know what? What's an official name other than something someone decided? So I'm deciding right here today to call this the business cycle, right? This is just how we normally conduct our operations as a business, and we are focused on how we finance in order to invest. That's what we're doing today. All right. Well, what is capital structure? Again, capital is just cash, right? We're raising cash. So how do you structure that raising capital? Well, you have debt, equity, and preferred stock, and we will talk about those and their relationship between themselves. Why is it important? Well, each type of financing activity has a different component, right? Different qualities. Debt is a fixed payment structure, you pay interest payments. Equity, well, if you sell ownership of your company, you're giving up future profits of your own company. So, super important to understand how a company is structured and does it have high interest payments because of that, right? Does it have to give up a part of itself in order to raise cash? And as I said, what does raising capital do? It allows you to purchase investments to operate and do whatever you need to do, whether it's getting started or maybe you're Nike and now you want to start operations in Argentina, right? Now you are going to raise additional capital to build your facilities in Argentina. And what is an optimal cost of capital? Well, cost of capital, right? What is a cost of capital? Well, let's just say all we have is debt. Right now, we're just borrowing $1 million to start our company. And we're just using debt. We're just taking out debt, right? Using bonds, fixed interest payments. Let's say we pay 5% on our bonds. Pretty straightforward, right? We're using the $1 million to buy a factory. Now, if we do $1 million, what's 5% of that? That's $50,000 a year in interest we are going to pay. So this is the cost of that. Obviously, there are other ways to calculate that, right? The effective interest rate, depending on which lessons you viewed in which order, you may have seen that already. If not, you will see that. But simple interest rate, $50,000 a year of interest on this. And so your cost of capital, your cost of this $1 million is 5%. Now that's super simple, right? Because then maybe we borrow an additional $2 million using preferred stock, or we not necessarily borrow, but we raise another $2 million with preferred stock. Now, maybe we have a payout ratio of 4% there. Now, and we will dive into this and make sure you know it, but now we're going to have to do a weighted average because it's not just 5%, right? The cost of the capital, the cost of the cash we raised here is not just 5%. Well, now it actually gets lowered because we have additional cash raised at 4%. And we're going to do a weighted average, not to jump too ahead, but we will do that and much more. Now, the optimal cost of capital is the ratio of debt to equity that produces the lowest WACC, or the weighted average cost of capital. I'm just kind of giving you an introduction here. We will for sure go into the details of that, the nitty gritty, just giving you a nice introduction, high level executive summary. And who does not like a nice executive summary? Well, these required rates of return that we are going to need to make, this depends on, right, so many factors, depends on what management wants, depends on what investors are demanding. All right, so leverage, we're going to talk about that. We're going to talk about, is it bad to have too much debt or too much equity structure? All of that and more will be discovered here.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.